So I'm wondering, just Raoul, like for the crypto native investor who is looking to get their foundations strong and be prepared to capture the maximum amount of opportunity, how should investors be positioned? How should they get their feet fixed on the ground?
Look, it gets harder and harder each cycle because you've got more and more assets and more applications. So it's actually not easy. So for the general person, ETH is a good proxy. Anytime you try and stray outside of that, you're just following narratives unless you really are involved in a space and you understand what drives it, the adoption rates, the Metcalfe's law stuff, all of this stuff. It is very, very hard to figure out how to trade it. So I think keep it simple, stupid is generally the best outcome unless you're deep into a particular area of the space, but then you still can't be blinded by your own biases because we don't know what the next big breakout is going to be.
Macro investor Raoul has recently shared his predictions and insights on the current state of the market, particularly in relation to cryptocurrency investments. Today we will delve into Powell's observations and forecasts, providing comprehensive information for investors seeking to make informed decisions in the crypto space. By understanding Powell's perspective on the business cycle, liquidity, and global economic factors, you can gain valuable insights to guide your investment choices and navigate the dynamic world of cryptocurrencies. Powell emphasizes the significance of the business cycle in driving liquidity and its subsequent effects on the economy. He highlights the correlation between the business cycle and the ISM survey, which serves as an indicator of whether the economy is in a recessionary or expansionary phase. During periods of economic slowdown, Powell asserts that injecting more liquidity into the market is crucial to stabilize the economy. This can be achieved through measures like cutting interest rates or expanding the Federal Reserve's balance sheet. Crypto spring and its implications for asset prices. Powell suggests that the recent shift in the liquidity cycle signifies an exceptional buying opportunity in the market. Termed crypto spring, this phase is expected to drive forward-looking asset prices, particularly in technology and cryptocurrencies.
What are you saying in terms of the average crypto investor getting their bearings? Are you saying that we should just maintain course, be patient, that this is just kind of early springtime? How do you know that we will get to another summer season, that we will have another bull market in the future? Are you taking that on faith, or is there something more to the thesis here?
So if there are two factors that drive the crypto market overall at a macro level, one is liquidity and the other is the adoption of the technology. So if you assume that liquidity doesn't come back, i.e. nothing changes, does the ecosystem grow? Do we get new applications for the technology, in which case it will perform, just not as well as previous cycles? If you've got liquidity as well, which is the economy looking shit? Is it going to remain shit? Are the central banks going to have to do something about it because unemployment's starting to rise or inflation's starting to come off too sharply, or the banking system's blowing up? Those factors, then you bring the liquidity equation back in. Currently, we've got the liquidity equation and a little bit of the adoption equation coming in. The sweet spot of the market is when both are happening.
Powell points out that technology and crypto assets have historically outperformed during periods of economic weakness and increased liquidity. This observation aligns with recent market trends, further reinforcing the potential for significant gains in the crypto market. Powell emphasizes the importance of global liquidity in influencing cryptocurrency prices. He reveals that global liquidity has consistently exhibited a strong correlation with Bitcoin prices, with an over 80% correlation over the past decade. Recent data from Cross-Border Capital, a research group monitoring liquidity conditions, indicates a rise in total global liquidity to nearly $170 trillion in June, up from $158 trillion in October 2022.
So I don't think we would have, for it to do something catastrophically different, i.e. be very negative, we'd have to see an ongoing decline in the use of the technology and an ongoing rate of change negativity to liquidity. But rate of change liquidity, even if they just stop tightening rates and stop shrinking the money supply and stop decreasing the balance sheet, is enough for the beach ball underwater. The beach ball is the adoption of technology plus animal spirits.
Central banks worldwide have injected a net $1.7 trillion into money markets since November, further contributing to the rise in global liquidity. Factors influencing central bank intervention. Powell identifies several macro issues that could prompt central banks to intervene and increase liquidity. These include the potential for a banking sector crisis, a commercial real estate crisis, a drop in inflation rates, and an increase in unemployment. These events could potentially lead central banks, including the US Federal Reserve, to reverse their more restrictive monetary policies and implement quantitative easing measures. Such interventions are typically bullish for asset prices, including cryptocurrencies. The outlook for cryptocurrency investments. Powell expresses his bullish stance on technology and cryptocurrencies, particularly Bitcoin and Ether. He believes that as global liquidity continues to rise, crypto assets will experience significant price gains. While short-term market fluctuations and opposing narratives may create uncertainty, Powell is confident in the long-term potential of crypto assets.
Is you just buy a basket of stuff, or just hold some ETH and just sit with it and forget about it and add at those macro cycles and just keep going. That works really well. It's worked for the Bitcoin people who've been in it forever, works for the ETH people. It just works. But most of us want to feel like we're just doing something, that we're not just, because we get bored and we like the attention span. There's all the noise around it. So what I tend to do is I have a few cross rates that I look at. So back in 2020, back end of 20, I had the Bitcoin ETH cross all the time staring at it, and I was waiting for that breakout. Then I switched most of my portfolio because I saw the changing narratives between the two, the adoption, everything else, and I switched most of my investment into ETH back then. I'm looking at, and I wouldn't do it to the same extent because it's not as big, but I'm looking at, for example, the Solana ETH cross. Does that start moving? So would I switch capital based on something like that? Yes, I might increase an allocation. So at least I feel like I'm doing something.
He also emphasizes the importance of new capital flowing into the space, as it will drive further price appreciation, especially as institutional investors and asset managers begin to explore cryptocurrencies. Raoul Pal's insights provide valuable guidance for individuals considering cryptocurrency investments. Understanding the business cycle, the role of liquidity, and global macroeconomic factors can help investors make informed decisions.
What is our true north in crypto? Where should we be pointed? What are the use cases that will still remain going into the next cycle? What are the narratives that will still remain? Can you kind of summarize this for the typical crypto investor who's maybe feeling punched in the gut from the last year or so of a bear market? What is the true north for crypto in your mind?
The true north is not narrative, because narrative changes. And this bull market will have a different narrative, and the next bear market will have a different bear market narrative. So narrative shifts. There is one way of navigating it, which is a very simple way that I use, is the log trend channel of this. And that keeps you honest with where you are and what's going on. So I find that very useful. The other thing is I did a lot of work on what drives price action in the space. And it's Metcalfe's law that I've written extensively about. And you can basically estimate Metcalfe's law by two factors. One is the number of active users, and this applies to the whole of crypto or just any ecosystem you want. And then the other predominant factor is the value transacted in a week or a month in dollar terms. Right? People have all sorts of different measures, but those two together basically describe most of price. And what I found is that I checked it against pretty much all of the major tokens, and they all are priced accurately. So like there's no informational edge in knowing that thing. So it's not like an arbitrage opportunity. ETH is different. It trades at a premium, and I think that was because of yield, or whether it's yield or whether it's the burn mechanism, I'm not sure, or the combo of the two. So, okay, fine. I think we'll see that in other chains that do similar stuff. But if we step back and say, okay, what is the informational value I've got there? You only need to know two things for the entire space to know whether the economy of crypto is growing or not. It's, are the active addresses going up or down? Is the value being transacted going up or down? And if those things are trending up over time, the ecosystem is in economic expansion. If it's not, it's in recession.
Powell's observations and predictions suggest that the current market conditions, including increased global liquidity and potential central bank interventions, create a favorable environment for cryptocurrency investments. As always, it is essential for investors to conduct their own research, evaluate their risk tolerance, and stay updated with market developments. By staying informed and employing a well-informed investment strategy, investors can navigate the crypto market and potentially reap significant rewards in the long run.